Welcome to The Explainer. Today, we're diving into something pretty wild that's happening in the markets. We're looking at why two very different assets, old school gold and new school Bitcoin, are both absolutely skyrocketing, and more importantly, what it tells us about the future of our money.
Okay, let's just start with one number, a number that really frames this entire conversation, 70%.
That's the incredible surge we've seen in gold. You know, gold, the asset that's supposed to be super stable, kind of boring even. A 70% jump in just 18 months is, well, it's a truly historic run, and it's a massive signal that something big is changing under the surface.
So what is lighting a fire under an asset as old as civilization itself? Well, a huge part of the answer lies with some of the biggest financial players on the planet.
Just look at this shift from central banks. Historically, they were about 10% of the global demand for gold. But last year, that figure doubled to 20%. They are buying gold at a pace we have not seen in decades.
So why the sudden appetite? A few key things are happening all at once. First, they see governments just printing money nonstop, and that erodes the value of their reserves. They also see interest rates getting cut, which makes holding traditional bonds, well, less attractive. And here's the kicker. After the US seized Russia's reserves back in 2022, the dollar suddenly didn't feel like a completely neutral asset anymore. The result of all this? Gold has now officially leaped over the euro to become the #2 foreign reserve asset in the world.
You see, this isn't just a story about gold getting expensive. It's pointing to a much broader trend, a growing crisis of confidence in the money that governments issue, what we call fiat currencies.
And at the very heart of this whole trend is a search for something called sound money. All that means is money that has a finite supply. It can't just be inflated away by a government that decides to turn on the printing press. Gold has been the classic example for thousands of years, and Bitcoin is basically its modern digital cousin. People are literally fleeing assets that can be created out of thin air for assets that are scarce.
And this leads us to a pretty blunt conclusion, one a lot of big investors and even central banks are coming to. The old playbook of just holding government bonds and stashing cash, it's becoming a guaranteed way to lose your purchasing power over time.
And this table just lays it out perfectly. The Fed says it targets 2% inflation. Okay. But the actual debasement, the real loss of value in the dollar since 1971, has been closer to 4% a year. And it's getting worse. We've seen a 30% loss in purchasing power since just 2020. So think about it. When you hold a government bond, the interest you earn gets completely wiped out by how much the currency is being devalued. You're getting a negative real return. You are quite literally losing money by playing it safe.
Now, gold isn't the only one benefiting from this. This exact same crisis of confidence is what's fueling its modern, digital alternative.
As historic as that 70% run for gold has been, Bitcoin has seen an even more insane rise, appreciating nearly 300% in that same 18-month window. It's riding the exact same wave, this flight from fiat.
Now, this might sound a little strange, but if you follow the crypto space, you'll sometimes hear this narrative that Bitcoin has been a bit flat, or that it's underperforming. I mean, how is that even possible with a 300% gain?
Well, the answer is kind of fascinating. It's not about how it's performing compared to gold or stocks. It's all about how it's performing compared to expectations. See, the market has gotten so used to Bitcoin having these explosive, face-melting rallies that when it only goes up 300%, some people actually feel like it's lagging. It's a weird paradox of its own incredible success.
So where does this all go from here? You could argue that we're watching the very early stages of a fundamental battle between two totally different financial systems.
To kind of frame this battle of systems, let's use a simple question we can all relate to. Could the private sector fix the DMV? We've all been there, right? The long lines, the paperwork. Now just imagine a different approach for a second.
The argument behind this little thought experiment is pretty simple. A private sector innovator, somebody like Jeff Bezos, would almost certainly come in, slash costs, make the experience way better, and just make the whole thing more efficient, all while probably creating more jobs. It's really just a comparison of different incentives and different ways of operating.
And this gets to the absolute core of the long-term bullish case for something like Bitcoin. It's designed to be a financial system that runs on code and math. It doesn't have the bureaucracy, the inefficiencies, and let's be honest, the potential for human error that's just built into any government-managed system.
So this leads to a predicted path for how the very institutions Bitcoin is competing with might end up adopting it. It starts small with countries that have nothing to lose, like El Salvador. Then you'll see energy-rich nations start mining it because it's profitable for them. Later, as younger generations who grew up with this tech start to take over, well, the final step will be central banks adding Bitcoin to their balance sheets, just like they're doing with gold right now.
Okay, let's wrap this all up with a really interesting, specific, and kind of contrarian prediction for the very near future.
So this prediction comes with a 75% confidence level that September, which is historically a pretty weak month for the markets, is actually going to be a strong one for both Bitcoin and stocks.
So, why the contrarian take? Well, there are three main reasons. First, when literally everyone expects the market to go down, it often creates the perfect setup for a surprise rally. Second, Bitcoin is heading into the month well below its peak, so there's plenty of room to run up. And finally, everyone expects interest rate cuts from the Fed, and cheaper money usually flows right into assets like Bitcoin and gold. It could be the perfect storm.
So, the crucial thing to take away from all this isn't just about the price of gold or Bitcoin. It's about a fundamental shift. We are witnessing a global reevaluation of what money even is, and it's being driven by a loss of faith in the traditional systems. And that leaves us with the big question to really chew on. As this trend continues, where is all that value going to flow next?